Stock trading has never been more accessible, but easy access does not make investing easy. Choosing the best brokerage accounts, understanding online trading platforms, finding trustworthy advice, and researching individual companies all require patience. Today we will examine Fidelity brokerage accounts, Robinhood, and 5 widely followed stocks: Johnson & Johnson, Bank of America, Amazon, Nvidia, and Tesla. Before we choose a platform for stock trading, decide what you're trying to accomplish. A long-term investor savings for retirement has different needs from active trader making frequent decisions. Consider the investments offered: research tools, customer service, account security, cash management features, retirement choices, and the total cost of trading. Many stockbrokers advertise $0 commissions on stocks and exchange-traded funds, but the investors may still encounter option contract charges, regulatory fees, transfer fees, subscriptions, margin interest, or cost hidden in bid and ask spreads. The best brokerage accounts are not automatically the ones with the flashiest applications. Confirm that the firm is registered, understanding on how Confirm that the firm is registered and understand how uninvested cash is handled. Look for Security Investor Protection Corporation coverage, while remembering that this protection concerns missing assets. If a brokerage fails, it does not protect you from ordinary market losses. Fidelity brokerage accounts are popular with both beginners and experienced investors. Fidelity currently offers $0 online commissions for United States stocks and exchange-traded funds. No minimum required to open a standard stock trading brokerage account. Fractional share investing, retirement accounts, mutual funds, bonds, research, advanced trading tools. Fidelity also provides telephone and branch support, which may appeal to investors who want more assistance than app-only experience. That does not mean every transaction at Fidelity is free. Option contracts, certain mutual funds, foreign securities, brokerage-assisted trades, and margin borrowing can create cost. Read the current fee schedule instead of relying on a headline. Also review execution quality, because the price at which an order fills can matter as much as the commission. Robinhood helps make commission-free mobile stock trading mainstream. It's a simple interface, fractional shares, recurring investments, retirement products, and access to stocks. Exchange-traded funds, options, and cryptocurrency have attracted many new investors. Standard self-directed accounts offer commission-free trading in listed stocks and exchange-traded funds, although regulatory and activity fee can still apply. Robinhood Gold adds subscription-based features, while margin, transfer, options, and other services may involve separate cost. Robinhood's simplicity can be an advantage, but it can also make trading feel like a game. Frequent notifications, rapidly changing prices, and easy access to options may encourage impulsive decisions. Options and margins can magnify losses, and margin interest continues whether a trade succeeds or fails. The outcome depends on the discipline and knowledge of the person using it. Some investors would rather work with a professional. If you search for financial advisors near me, do more than choose the first sponsored result. Ask how the advisor is paid, which services are included, whether the advisor acts as a fiduciary, and whether any products created conflicts of interest. Verify the person and firm through the Securities and Exchange Commission's investment advisor public disclosures. When researching individual stocks, begin with the business, not the ticker symbol or social media excitement. Read annual reports, quarterly findings, earnings releases, and risk disclosures. Examine revenue growth, profit margin, free cash flow, debt, competitive advantages, valuation, and management use of capital. Then ask what expectations are already reflected in the share price. Johnson & Johnson, or J&J stock, represents Johnson & Johnson, a healthcare company focused on innovative medicine and med tech. Investors may be attracted to the healthcare demand, a broad product portfolio, and its history of returning capital to shareholders. Risks include clinical trial failures, patent expirations, regulations, product liability, competition, and pricing pressure. A respected name can still be a poor investment if you purchase at an unreasonable valuation. BAC stock represents Bank of America, whose business includes consumer banking, wealth management, corporate banking, and global markets. Bank earnings can be influenced by interest rates, loan growth, credit quality, deposit cost, capital requirements, and economic conditions. Investors studying BAC should watch net interest income, provisions for credit losses, expenses, capital ratios, and the health of consumers and businesses. Amazon, trading under the ticker AMZN, is much more than an online store. Its operations include e-commerce, third-party seller services, advertising, subscriptions, logistics, and Amazon Web Services. Amazon scales offer advantages, but Amazon stock still carries risk involving intense competition, regulation, enormous capital spending, cloud market expectations, and pressure on retail margins. Investors should separate enthusiasm for Amazon products from analysts of the stock's valuation. NVIDIA stock has become closely associated with artificial intelligence because of the company's accelerated computer hardware and software are central to the data centers and AI workload. Growth opportunities may be substantial, but expectations are also high. Investors should examine data center demand, customer concentration, competition, supply constraints, export controls, product transitions, and whether earnings can grow fast enough to justify the market valuation. Tesla stock combines electric vehicle manufacture with energy generation, energy storage, charging, software, and ambitious automation products. Supporters focus on innovation, brand strength, manufacturing, scale, energy growth, and potential future technology. Skeptics point to automotive competition, pricing pressure, execution risk, regulation, leadership concerns, and a valuation that may depend heavily upon future products. Tesla can move sharply when expectations change, making position size important. No brokerage account, financial advisor, or famous stock removes risk. Diversification can reduce the damage caused by one company's disappointment, while a long-term horizon can reduce the temptation to react to every headline. Before trading, know what you're buying, what could prove this thesis wrong, how much you can afford to lose, and when you will review the position. Successful investing is rarely about finding one perfect platform or predicting tomorrow's hottest stocks. It's about controlling costs, researching carefully, managing risk, and remaining consistent. Fidelity, Robinhood, J&J, Bank of America, Amazon, NVIDIA, and Tesla are all deserve a valuation based on your goals, not someone else's excitement. This video is educational and not personalized financial advice. Consider your circumstance and consult a qualified professional before making investment decisions.